We believe now is actually the best time because now the macros obviously not great. Things are very reasonably priced, much better when you look at compared to 21 valuation. And because again, this is actually quite
The podcast. So today we're joined by Wei Young, who runs investor relations over at XVC, a huge fund based out of China. So Wei, just kind of talk us through what's the investment thesis of XVC, and could you just share a few points on that?
Sure. Maybe just to start, give you a bit of background about us. So we're now tracking at 1.3 billion in terms of AUM. We are early stage growth. So we invest anywhere from seed to Series B and C. We typically lead the Series A and B. We look at broadly consumer and tech, fairly diversified, consumer-facing services, food and bev, smart electronics, e-commerce platform, social media. In terms of tech, there's fintech, edtech. Now, regarding the investment thesis, I think what we really look for is the new product market fit. That's very important for us, driven by very long-term structural changes. This is slightly different from the typical VC where you're looking at breakthrough revolutionary tech. Obviously, that's a good model, right? Technical barrier. But what we're looking for, what we focus on, I think most important to us is the new product market fit. And it has to be driven by very long-term structural changes and in a very big market. That's number one.
Yeah, that's a really interesting kind of investment thesis, because most of the funds that I've interviewed, like the people that I've interviewed on the various funds from around the world, their primary focus is not on product market fit, but rather on like finding the next category defining companies. So that's pretty interesting that you guys only focused on like consumer and tech. So talk us through like what are the types of founders you look for in consumer and tech, and like what do you look for in those that you eventually back, or those that you take a first meeting with?
Right. The founders we typically work with, typically back, they're really not typical founders. We try to narrow it down to simplify the process, right? We try to look beyond degree, a pedigree, or a network. We're trying to examine some underlying features. How rational is the founder's decision making process, their thinking habits. We look for really if the founders are able to make sound business decisions, and these will consist of asking whether scenario-based questions or kind of tasks-based questions to really get a feel of how the founder have made the decisions in the past, and especially in different situations. And then, yeah, that's I think the main thing, right? Making sound business judgments. The other things we look for, quite importantly, is to build how the founder is able to build an efficient organizations, especially at the stage of scaling up. Because we typically go in Series A and B, and that's when they scale up, where they probably already have a product, some sort of product market fit, and some feedback from the market, really, some revenue, not profitable yet. And this is where, you give them the capital to really help them, expand business operation, and the team could expand, from 20, 30 to double it every quarter. And I can give you an example. We backed a company late 21. It's called Lifen. Its main product is a high-speed hair dryer. It's a very a strong competitor to Dyson. It sells, 4 times better than Dyson online in China. Now, this company, uh, when we backed it, it's making little revenue, but now it's a 2 years product that's high-speed hair dryer. And then last year, 23 alone, they sold over 400 million revenue. And that's a young company. That's the kind of scale and speed at which it was growing. So the back to the founder's question, right? The ability to manage, right, an efficient organization that grows at a very fast speed, that's also quite important.
That's really cool that, XVC looks for atypical founders and they do all kinds of all different. So my next question is more like you were discussing like one of the wins that you had in your portfolio. So like you were talking about LIFO as one of the wins and it's doing very well. And so what have been some of those like biggest losses or wins that you've had during your tenure at XVC, and like what made those kind of stand out or didn't, or like how did that pan out? And if you don't feel comfortable sharing with that with the audience, then we can move on to any next questions as well.
Right. Um, I think about the wins. I think another one I have to say, um, it's Chagi. In Chinese, if anybody listening in Chinese, it's 霸王茶姬. So Chagi is this very innovative, fastest growing milk tea franchise. It has about 4,000, over 4,000 stores in China, 500 in Malaysia. Some just reopened in Singapore. Very tasty. I recommend you taste it. This is back to that product market fit. What we're really impressed by Chagi is that it's still growing and its growth is driven by the flagship products, the top bestseller, top 3 products. They count for over half of the sales, and that's I guess the research-driven, data-driven approach. That's very important because we invest in the food and bev industry, and this industry is very tough because it has a fashion risk, meaning that most things you taste, you drink, you get tired of it after some time, and it's very rare to actually find a product that has a very long-term customer retention. And we believe that because we saw the data and we invested in Chagi, and it's still growing really fast and opening more stores, and all the sales and the growth were driven by the core flagship products. So the things like this, it worked, right? We have the theory, the data, and it worked. It's fantastic. It's a really, really good way, and it's delicious too. And back to just add on a little bit more about the food and bev industry. We've done research before, and really you see some of the big names, right? Coca-Cola, Pepsi, even the McDonald's. You need to have the cool flagship products that are winning. Really start with those, and then you're able to build that brand, and that's the long-term moat. You have the brand, you have the flavor that really built into people's memory, people associate it. Like Coca-Cola, very good example is, people hold it, they feel happy, like serotonin or the dopamine start, generating. It's the association, the taste, the memory. Those are the magical elements. And the products in food and bev, with few flagship products that are able to, quickly quickly capture the palates most people, and for a extended period of time. These are the ones that can really make it. And I think we have Chagi that's, in our mind, as it turned out to be a winner. Now, about the losses, I think this will go will relate to a question I think later question you will ask, which is the I guess the fundraising environment in China, particularly startups. Um, some of our losses, including our peers in the upcoming months, this will have to do with the fundraising environment being very, very difficult, and everybody's very cautious. Not just the startups, it's also the VCs, right? The entire ecosystem. So as a result, everybody has, increased their criteria because it's very difficult for companies to fundraise. And when you give them a check, a Series A, uh, back then, a few years ago, it's cash burning, right? You wanted them just focus on scale up rather than profitability. But at the moment, you want them to be a bit cautious with how they want to scale up and probably be break even. Don't raise that many rounds, yeah, after Series A and B. So it's a different, more to do with the market. Yeah.
I think that was super interesting. Like, I haven't had a guest before from China, or like who has covered the Chinese VC kind of industry. And so I was like super curious to like know, like, what is your view on investing in China, and like, is now a good or a bad time for people to be investing in the region?
Yeah, we believe now is actually the best time because now the macros obviously not great. Things are very reasonably priced, much better when you look at compared to 21 valuation. And because, again, this is actually quite paradoxical because the fundraising environment is so difficult. A lot of VC fund managers, they're starting to, instead of raising foreign capital, US dollar denominated funds, they're raising domestically from like China, and that lot have to do with fulfilling some government's KPI if they have like government-backed funds, uh, and that actually make it less efficient in the ecosystem. And China still remains to be a massive market. So in a place where it's still a massive market, you look at both the demands and supply side, and because the players, the market participants, are pretty inefficient, and they're going even more. And there are very few research-driven focused funds. I'm not saying just us, but there are some like us, right, who employ the research-driven, data-driven approach. And this is when you can capture the most alpha. This is when I think you buy in the good companies, and then they will gain market share, build their brand, build a moat, and they can wait until the market come back again and then get a good exit. So now we believe it's actually one of the best time to invest in China, especially startups. Yeah.
Yeah, that was a super interesting take that you had, and yeah. So my next question is more like, could you just talk us through like your take on the valuations for Chinese startups? Like you were saying a few points on that, but could you just expand further on like where you see the valuation in the next few years, maybe?
This has to do, I think, different sectors different, right? Even AI companies, like AI company in the US are pricey, AI company in China are pricey too. But if you look at it comparatively, uh, Chinese company is still treated as a discount. Um, if you look at take public company as an example, right? Amazon's trading like close to 60 times PE. It's almost 2 trillion market cap. PDD is like 70% of Amazon's GMV, but that's trading like 20 something 30. And in terms of market cap, again, it's much lower. Uh, so the private side, right? Zhipu is a AI company called Zhipu. and Moonshot. They both raised quite successfully, but they are still priced at 3 billion, and that's very little when you compare that to OpenAI or Anthropic. So Chinese companies are still very reasonably priced. That's the first thing. And the second is, we're depending on the sector. Yeah, it's still the valuation of particular companies will be affected by the market trends. So even like good companies, profit generating smart electronic companies, they probably don't get same kind of multiples as AI company, for instance, as like battery companies, as companies that fall into strategic sectors, especially the ones backed by a lot of government initiatives. Yeah,
Yeah,
I
I
hope
think
that's
that was
helpful.
yeah, that was extremely helpful, especially for me. Like, I don't know much about China and the VC economy, VC industry over there, and so it was super interesting to like get your insights and your takes on valuations in China and all the different things that we talked about. So let's wrap this up. And do share like how the audience can reach you, how they can pitch, and how they can learn more about what you guys, the phenomenal work you guys are doing over at XVC.
Sure. Um, yes, you can. They they can contact you, and then you have my email, and then you can pass them
Yes, yes,
to
I
me.
have your email.
I think that could work. And in terms of if they're interested in submitting a business plan, you can just go our website. They have a QR code at the bottom of the page, and there's a email saying how to submit their plan. That's for entrepreneurs. Obviously, for investors, can put them in touch with me. Can tell them more about our fund, our approach, and I think just to wrap this up, um, we we are China focused, right? Most of our portfolio companies are based in China, but they actually generate revenue globally. About 40% doing just only China, China business, Chinese consumer, but a third are actually targeting overseas consumers, like being in the US or Europe or Southeast Asia. We have companies actually based also in China as well. Uh, Now, what I want to close this on is actually we are not sure if you used Preburn, but we actually posted this on LinkedIn as well. Our Fund 2, the 2019 vintage, actually got ranked to be the number one best performing VC fund of the 2019 vintage globally, between the 250 and the 500 million category. And that's really hard, given that it's a 2019 vintage. And as I said before, startups are having a very difficult time to raise funds. So pretty much, if you 2019 vintage, invest in 20 and 21 or 22, and pretty much since 20 Q2 22, nobody could raise money anymore, and so all the valuation are stuck back 2-3 years back. So this has been very difficult, but I think our recognition is good evidence to say, to show that there's still alpha in China, and with a good research-driven approach, you can capture those. Yeah.
Thank you so much for sharing that closing statement. I think it will be super impactful for any of the listeners today who are curious to know more about Chinese